Stock guy, I had to temporarily sell my portfolio to help my parents who had an accident. I know timing the market is wrong, but I got my money back and it feels like the market is well high. Do I get in ASAP, get in over time, or wait? Here's what I'm going to tell you. Legging in will always be the answer, but here's something I want to tell you. I'm going to give you a true story of a person who came to me last night and told me they paused their reoccurring buy on the market because it's so high. I won't say the name or my relation to this person, but I'm going to tell you the same thing that I said to them. Okay? I'm going to tell you the same thing I said to them. What do you mean you thought I was going to be proud? Okay? Listen, do you notice that there's none of our daughter's pictures up on the fridge? Because we don't reward mediocrity in this house, okay? All right? You thought I was going to be proud of you for pausing a recurring buy. It's not a smart move. You literally are married to the stock guy. I tell people all the time, trying to time the market is one of the biggest regrets most people have when they look back on the history of their investing journey. Here's what I'm going to say, okay? You have a reoccurring buy, which is the smartest thing you can do in the market, right? Markets do this all the time, and you're buying up and down, up and down, up and down. And now we're here, right? And she says, I paused my reoccurring buy. I said, why? She goes, the market's so high right now. I said, what if it keeps going? She goes, well, then I'll start it up again. When? After 2%, 5%, 10%? I said, okay, so what if it falls? Well, then if it falls, then I'll start reoccurring buy. How far? 1%, 2%, 10%? What do you think? Where you have a number? No. If it falls 1%, you'll be like, see, I was right. I'm going to wait for another 3%. What if it never falls more than that? Right? So here's the thing. This is why trying to time it is so stupid. Let's say you keep buying and the market never slows down. Well, if you stopped your reoccurring buy, you miss out on all these gains. So now it was a waste. It was stupid. If the market falls, you weren't buying the dip on the way down. So when you do finally start putting money in, you're probably going to wait till it starts going back up. And you missed out on all this dollar cost averaging. Or you'd probably be like, oh, well, it's going to go back down again. I'll just wait. And then it goes back up to where it was originally. You miss out on all this. And now you're going to be like, oh, I fucked up. All right, I'll get the next pullback. Next pullback is in 10 years. It's gone, or in 3 years, it's gone 25%. Falls 10%. You waited for the pullback, but you still missed 15% more from where it was now to the bottom of the next pullback. You're not going to time this correctly. Yo, Generous Greg with the 5 gifted. So what I like to say is just keep your reoccurring buy. If you're a little concerned about a drawdown, open the distance on the buyback or pull back a little bit on the amount you're buying back, but don't not do it. The best thing to do is as it's running, if there is a pullback, you're automatically buying. And remember the rule we had last year when you were buying VU or fractional shares of VU? If you're buying every week, every month, every other day, whatever, if you see a day where the S&P 500 is down 1% or more, add a little extra. There were like 33 days last year where the S&P 500 had fallen at least 1% midday or throughout the day. So if you just had your reoccurring buy and then threw a little extra on the days where it was a little bit extra red, you doubled your gains, right? But stopping your reoccurring buy thinking, well, the market's at an all-time high. Well, remember something. Market was an all-time high 2001. It crashed. Then it came back to that same level 2008 and then crashed. 2013, 2014, 2012, 2013, it's at the same level. Guess what? A lot of people stopped their reoccurring buy there because they're like, well, we're at the all-time high again. Get ready for the next crash. The next crash happened up here. Also, to the people who never paused, they bought the dip and they're up 550% instead of 180%. And the people who stopped in 2013 saying, I'll wait for the next pullback to buy, their next pullback was in 2018. It dropped 20%, but it's still up 40% higher than where they started. And then but did they start buying there? No, because they didn't know where the bottom was going to be. What if they thought the bottom was another 5% and they missed it again? I'm telling you guys right now, Every single person who has been a long-term investor of the S&P 500 or large cap stocks over the past 10, 20, 30 years that tried to time it wishes they could go back and just not try to time it. Just buy, right? Just reoccurring buy and forget about it. And if every single person in history had the same thing they wish they could go back or are happy that they did, you are not going to be different. They all thought they were going to be different. They all thought they were going to time it right, and they wish they didn't f with it. Step 1, S&P total market. Step 2, reoccurring buy. All right, set up a reoccurring buy, whether it's a daily, monthly, weekly, I don't care. Step 3, lose your login. Step 4, reinvest divvies. Step 5, survive long enough to use it. Step 6, hookers and cocaine? Question mark? Or Christmas with family or something. But don't order the butter chicken. How to reinvest the dividends if you lost a login? Well, you should set up dividend reinvestment before you lose the login. But that should... Okay. Replace these, you dickhead. What's step 1? S&P total market. So VTI. Or you can get a little crazy like I am and start adding some VB. We still talking about your wife here? She's on step 6 yet? This is the same woman who came to me a month ago and said, I just realized I never allocated my HSA for the past 7 years. You hear me scream at idiots all day about allocating money and you didn't do it. Well, some guy at work told me that I have to have at least 10,000 in there before I can allocate. You're married to the stock guy and you asked some guy at work. And then she blamed me saying, well, you had the login credentials this entire time. You should have taken care of it. And then I get an email 2 days ago that says, congratulations, start your 529 journey now. I'm like, what? So what my wife did was for our son's 529, she just set me up as the person to take care of it. Didn't even tell me, just set me up for it. Which is fine, but poor kid will never get a 529 because I'll keep forgetting to do it.